Hi, this is David Lau, the Asian lender. In this video, we are going to look at 1099 and self-employed borrowers. So let's get started. So you've probably heard the term 1099 or 1099 employee. So what is that? So when you go work for a company, you either get paid one of three ways. Either it's a corporate to corporate. In other words, they hire you for a project. When you complete the project, they cut you a check, no tax taken out. Pretty simple. The other one, which is the most common, which is a W-2 employee. Essentially, you're an employee of the company. They pay your wages. Part of your wages include taxes being withheld, taxes being paid. And at the end of the year, you get a W-2 form, which is an IRS form, which basically outlines how much your wages are for the year that they paid you, what taxes were paid, and what taxes withheld. And that's the form that you would use to file your tax return. The third type is a 1099 employee, which is kind of a hybrid of both a contractor and also as an employer. Essentially, it's almost the same thing like the W-2. You get a form at the end of the year or at the end of quarter or at whatever period of time that you're hired for a project. And it clearly illustrates how much wages you were paid for that particular project or the year itself. The only difference is that there is no taxes paid and no taxes withheld. So you are responsible for paying the taxes directly to the IRS and also reporting your wages as well. Now, as a 1099 employee, what it really means is that you get a 1099 form, which is a tax form that stipulates that you're a independent contractor and that maybe you're on a commission salesperson type of wage. There's no payroll taxes taken out. Again, there's no income tax, no federal or state being paid by the employer. But the benefit is also that as a 1099 employee, you're self-employed. So therefore, majority of people use a Schedule C to file expenses, and that expenses help them lower their taxable wages, and at the end of the year, they pay less taxes. So there you go, that's a 1099. Now that you understand what a 1099 employee is, let's look at how that relates to qualifying for a home loan. Yes, it is true that people who are classified as 1099 employees will have a little bit tougher time in securing financing versus someone who is a W-2 employee. The reason is with W-2 employee, you have stability and consistency in your wages. From an underwriting standpoint, they know how much you're going to get paid per hour, pay per month, and pay for the year. With a 1099, there are possible gaps in employment. You'd be working 6 months on a project, complete a project, and then have unemployment for a couple months thereafter, and then work again. So stability is a key. And also, second thing is with 1099 wages is because you have the ability to claim most or all of your business expenses, your actual income is not really truly reflected. In fact, in some cases, a lot of 1099 employees actually have negative income. What negative income is when somebody writes off everything and at the end of the year they have little or no income to show, and therefore they pay less taxes. So for underwriting, that tends to be a higher risk, so therefore you have the strictness behind underwriting. So what can you do? Well, when it comes to applying for home loan, there are areas that most or all underwriters will look at. Number one is they'll look at your FICO scores. They'll look at your debt to income ratio. What that is your gross monthly income compared to what your monthly debts are. They also look at any negative items that you may have, such as foreclosure or bankruptcies, and also your employment situation. They like to see, again, stability in your job, at least 2 years in the same profession. And lastly, they look at your income itself. Are you getting steady income, or are there going to be periodic gaps in employment? So that's why it's really important that if you are planning to buy a home and get financing, that you talk to a lender first, so this way we can pretty much plan ahead. So I have some great news for the mortgage world for 1099 and self-employed borrowers. A lot of lenders have created new rules, new policy changes. In fact, some have even loosened their lending guidelines to help self-employed borrowers. One of the major players is Fannie Mae. You've probably heard of Fannie Mae. They are one of the largest investors of loans out there. What they do is they buy the loans that banks make to you, therefore creates more liquidity, allows banks to go out there and continue to loan. As long as the bank meets the Fannie Mae guidelines, Fannie Mae's will buy these loans from them. So some of the guidelines changes have been, especially on the tax returns. In the past, it was you required to show 24 months or 2 years of tax returns. Now, Fannie Mae will accept 1 year as long as you can show that you have 12 months of self-employment on your tax returns. Number two, which is a big one, is if you have only 12 months of self-employment, which is acceptable. In the past, they require 24 months, but you have to at least show that you have prior industry experience before. And another one is the debt to income ratio. This is a big one. Debt to income ratio, as you remember, is the ratio of your monthly income compared to your debt. There is a number that usually Fannie Mae accepts, which is 43. Now they've raised it to 50 if you are considered to be an exceptional borrower. What that usually means is that you put in a fairly significant amount of down payment, plus you have a higher FICO score than average. And the other one is for people who are W-2 borrowers that have like side jobs or a company that they created or a business. Now we can actually exclude that income, especially if it's a negative income and we don't need it to qualify. So on the surface, it doesn't really mean a lot, but it is actually big for self-employed borrowers. In today's market, there are a couple of programs out there that multiple lenders are offering or offering a variation of it for 1099 and self-employed. One is bank statements. You've probably heard of qualifying using bank statements. Essentially what it means is the lender takes your company's cash flow and they put into a formula, usually a P&L, and at the end of that formula, that calculation, they get a net income. That net income is the income that we use to qualify the borrower on. Some lenders use 1 month, some lenders use 3 months, some lenders uses 12 or 24 months. From what we've seen, the ones with the longer requirements, such as 24 months, will offer better terms. The reason why is 24 months gives a better picture of the borrower than just one. Now, these programs do come with a little bit of higher interest rate and higher fees, but it is outweighed by being able to qualify for a loan. Another variation of bank statements is actually using 1099. Essentially, it's the same thing, but instead of using actual bank statements, the lender just requires 2 years of the 1099s that you provide to your tax person, and that is what we use to qualify you with. Some lenders will do 1 year, some lenders will require 2 years. Again, the ones that are 2 years will tend to offer better terms. Now, if you are self-employed, be prepared to have your personal tax returns ready. Now, some lenders do not require it, but I always tell people just to have it in case. One of the minimum stuff that they will require is business license. You have to show that you are a viable business for the last 2 years. Generally, if you're in profession or vocation that requires a license, that usually is good. You run a trucking company, your Department of Transportation license. If you run a retail business, your resale permits for the last 2 years is usually good enough. Also, they may ask for a borrower prepared profit and loss statement. Profit and loss statement essentially is an accounting term that they use for a document where you put down on a spreadsheet how much your income was minus what type of expenses you had, and then that gives you a net income. The last thing that they may require is an actual letter from your tax preparer. CPA or a licensed tax preparer is usually the minimum requirement. The letter just stipulates that you have been filing self-employment for the last 2 years and also what percentage of the company you own. And that also, if you're going to use business funds towards your purchase, that it will not have any negative impact on your business whatsoever. So that is it for 1099 and self-employed. Fairly simple. If you have any questions, please let us know. The Asian lender also offers other forms of financing. We have some great stated income products for residential commercial. In fact, we have a great multi-family unit loan where we just used our rental income to qualify. So if you have something that's 1 to 4, you're looking to purchase it, you'll need 20% down, and we can also loan up to 80% of the loan to value. We have some of the most phenomenal hard money loans out there. So if you're looking to do your first fix and flip property, we can help you. I know a lot of lenders won't assist you unless you've done 3 or more deals with them, but I have a couple loan programs that are great for first time flippers. ITIN and Foreign National and DACA loans, we are very successful at closing those. And of course, we are your traditional FHA, VA, and conventional lenders out there. We are both a direct lender and mortgage broker. So we are literally approved with every single non-qualifying mortgage lender out there. If a loan doesn't fit a box, we will definitely find somebody who will. So please give the Asian lender a call. So this is our contact information. That is my direct number. You are welcome to text me, send me a message with your loan scenario, and I promise to return your call. That's my email address. You can welcome to send me 24 hours, but I probably will not return your emails until I am awake. And also that's our website, asianlender.net. Please visit our website. We have other videos that we've done before that we posted. If there's anything we can do for your clients, help you, assist you in answering questions, or if you have a loan scenario, please feel free to reach out to us. We hope to see you again next time. Thank you for watching this video, and God bless.